Hey, so I was looking at these FPI investment trends for the first half of April 2025 compared to March, and wow, what a shift in sentiment, right? Everything seems kinda down.
Right, exactly. March had some sectors doing pretty well, attracting good investments. But April? It's like a complete turnaround. We're seeing outflows across the board.
Yeah, that's what I'm seeing. Like, the financial services sector went from a positive INR 14,274 crore in March to a negative INR 4,501 crore in April. That's a major reversal, right?
Absolutely, a massive shift. It really highlights how quickly things can change in the market. And it's not just financial services, metals and mining followed a similar pattern.
True, metals and mining, from a positive INR 1,901 crore to a negative INR 2,829 crore. What's driving these changes, you think?
Well, it could be a number of factors, like changing global economic conditions, shifts in investor confidence, or even specific events affecting those sectors. And healthcare too went from a positive INR 89 crore to a negative INR 1,384 crore.
Wow, I didn't realize it was that widespread. What about other sectors? Are they following the same trend?
Yeah, many are. Chemicals went from a positive INR 491 crore to a negative INR 309 crore. Realty also flipped from a positive INR 585 crore to a negative INR 360 crore. It's like a domino effect, you know?
It really does seem that way. Even services, which were positive at INR 578 crore, are now negative at INR 1,175 crore. What's going on with telecom then? I see it's still positive, but lower than before.
Exactly. Telecommunications saw reduced inflow, going from a positive INR 3,073 crore to a positive INR 2,137 crore. Still positive, but definitely a slowdown. Media, entertainment and publication also experienced a similar dip.
Okay, so media went from a positive INR 446 crore to a positive INR 103 crore. That paints a pretty clear picture. What about the others category?
Even that took a hit. It went from a positive INR 2,237 crore to a positive INR 297 crore. It seems like very few sectors are immune to this negative sentiment, you know?
You're right. So are there any sectors where the outflows have actually increased?
Definitely. Information technology saw increased outflows from a negative INR 8,451 crore to a whopping negative INR 13,828 crore.
Wow, that's a significant jump. What else is seeing more outflows?
Capital goods also took a hit, going from a negative INR 299 crore to a negative INR 3,019 crore. And construction?
Don't tell me. Another big outflow, right?
You guessed it. Construction went from a negative INR 249 crore to a negative INR 2,461 crore. It's pretty grim across the board, isn't it?
It really is. Okay, so everything's down or more down. Are there any sectors that actually shifted from outflow to inflow? A little good news maybe?
There are a few actually. Fast-moving consumer goods shifted from a negative INR 5,593 crore to a positive INR 587 crore.
Okay, that's a surprise. So people are still buying their everyday essentials, I guess. Anything else bucking the trend?
Yeah, power went from a negative INR 240 crore to a positive INR 29 crore. And then there's diversified, which went from a negative INR 317 crore to a positive INR 28 crore.
Okay, so a few bright spots amidst all the gloom. What about sectors that are just consistently negative?
Well, automobile and auto components are consistently seeing outflows, going from a negative INR 2,864 crore to a negative INR 2,562 crore. Not a huge change, but still negative.
Yeah, people may be holding off on big purchases. What else is consistently down?
Consumer durables are also consistently seeing outflows from a negative INR 1,518 crore to a negative INR 1,026 crore.
Okay, so similar story there. What about oil and gas?
Oil, gas and consumable fuels are also consistently negative, going from a negative INR 3,419 crore to a negative INR 2,759 crore.
So pretty consistent across the board it seems. Any other sectors showing consistent trends?
Yes, forest materials also showing minor outflows in both periods.
And textiles?
Textiles are showing consistent minor outflows.
Interesting, so pretty stable there, even if it's negative. What about the sovereign sector?
The sovereign sector remained neutral in both periods at INR 0 crore.
So, no change there. Given all these shifts, what's the big takeaway here? It seems like a lot of changes, you know?
Well, the main thing is that we are seeing a broad-based negative sentiment in the FPI market in April compared to March. Big reversals in sectors like financial services, IT, and metals and mining are driving this trend.
Yeah, it seems like a pretty clear picture. So what does this mean for investors? Or even for the average person, right? I mean, should we be worried?
Well, it's always a good idea to stay informed, but it's crucial not to panic based on short-term trends. FPI flows can be quite volatile. And as always, we advise investors to check with certified experts before taking any investment decisions. Disclaimer, you know?
Right, of course. So what factors might be influencing these outflows? Is it just global uncertainty or something more specific?
It's likely a combination of factors. Global economic conditions, interest rate changes, geopolitical events, and even changes in domestic policies can all play a role.
Makes sense. So should people be shifting their investment strategies based on these FPI trends? I mean, how should we interpret this data, right?
Not necessarily. It's important to remember that FPI flows are just one piece of the puzzle. Investors should focus on their long-term goals and risk tolerance, rather than trying to chase short-term gains or avoid temporary losses.
Okay, so stay the course basically. What about the sectors that are still attracting inflows like FMCG and power? Are those safer bets right now?
They might be relatively more stable in the short term, but it's crucial to do your own research and understand the fundamentals of those sectors before investing. Remember, past performance is not indicative of future results.
Right, always good to remember that. Hey, if you're finding this info helpful, make sure to like, share and subscribe to the channel.
That's a great point. And it's also worth noting that these FPI trends can have broader implications for the Indian economy as a whole, right?
Absolutely. Big outflows can put pressure on the rupee, impact stock market valuations, and even affect overall economic growth.
Exactly. So it's something that policymakers and economists will be closely watching in the coming months.